Welcome to the Real Estate Show on KMED. July 22nd is our date. Pete Belcastro and Joe Brett, the real estate guys, with you today. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about all sorts of real estate-related issues and topics. Now in our 10th year here on AM 1440 and 106.7 FM, and up in Josephine County at 99.3. 10 years. Wow.
We don't have a lot of those 10-year stretches left in us. So those are pretty remarkable at this stage.
We're on the last one of
last quarter
for that. That's for sure. Well, in the market today, we'll get with Guy Giles and Russell Brown in just a couple of seconds here. I just wanted to tell you how crazy the market is right now, Joe. I mean, we talked about things are changing a little bit. In the June stats, which I just wanted to let people know, we've got the July ones coming up soon, but pending sales during June were up, 10% overall. New listings were up 16% from a year ago at this time. Yet, despite all of that, available homes per buyer were down 5%. Month supply of inventory was down 10% to just 2 months overall. And what are the three hottest areas right now in this market for sales? Name the three towns. Can you do it?
White City.
White City's one of them. Nope.
East Medford.
No. White City, Phoenix, and Talent.
Oh,
there
wow.
you go. Those are the three hot spots right now in the month of June. There's literally very, very little inventory in those places.
I didn't get that question in the pre-production meeting.
No, you
obviously.
didn't. I tried to stump you. Anyway, all right. Guy Giles with us today. Guy, nice to have you here from Bank 34 Mortgage. How you doing?
It's good to be back.
What,
I would have got all three of those right if you just asked me.
Okay, I can ask you. Let me ask you if I can find you. I'll get you something.
We have more questions.
Stump guy. All right, mortgage rates, before we go too far along, tell people where they are here at this part of July.
They're still plugging along in the really, really low fours. I mean, it's going to depend, obviously, my disclaimer on FICO score,
right.
And,
credit,
loan to value, 100 different, about 26 different things, actually. But the Fed came out this week and spoke, and, they're still pretty dovish on raising rates now, or actually not still. There's a little bit of a retraction from where they were going. So it actually helped the home loans improve the late part of last week, and they've held really steady this whole week. So we're in pretty good shape, I think, for the foreseeable future on rates. I don't think they're going to go down or have a big drop, but I don't think they're going to raise things up. And for people that don't do this every day, even though the Fed raises rates, that doesn't necessarily raise your home loan rates. Right. It's just on your credit cards and home equity lines of credit and things like that. It's not necessarily your mortgages, but they do kind of step together because they're tied into inflation and just kind of where people are putting their money. And if the stock market's looking really good, you can figure that's probably a bad day for home loan rates, and kind of vice versa too. So, but I mean, everything's kind of out the window. I thought for sure when North Korea sent off that ballistic missile that rates would drop, and they didn't. So we're just in a new era as far as everything goes. We can kind of track this stuff, but it's not a science anymore.
Would it help if we fire one back at them? Or?
I think that would help.
Yeah.
Well, I'm still not surprised that interest rates have not risen very much because, I mean, the Feds know if interest rates start rising high, the entire economy is going to tank. And right now, it's going really strong. It's going really well. And you're not going to see interest rates because, look, we talked about this a year ago. Remember when they were going to start raising these rates and what was going to happen? People predicted all sorts of things. They haven't risen very much, really, because they can't.
No.
And they're not going to, I don't think.
I think it's still a really, really reasonable thing to buy a house. Our prices are a little inflated right now, but I think in the long run, it's still a really good time to get in.
And that would really be a double whammy with our lack of inventory and our rising home prices. If the interest rate went up as well, we're going to exclude a whole another layer of potential home buyers from the game.
Now, I read a quote from Guy Giles in the Mail Tribune in their section that Greg Stiles wrote about the housing or the statistics.
Guy has arrived.
Guy was there now, and I read a quote from you about changing ways that you're doing loans, that new programs, that they're softening rules, something like that. What? Okay, is that true? What's going on with that?
A lot of it has to do with them loosening up what we call DU, or desktop underwriter. So if we put in information, I mean, obviously it's only as good as the information you put in. So if you put junk in and just kind of make up that a guy or a gal makes $400,000 a year, but they really work at Taco Bell, that's not accurate information. But if you put it in accurately, historically, it's been about the mid-40s where you can get what's called an automated approval. They've raised that up now this month to where we're getting automated approvals, as long as there's some compensating factors. They might have a little bit of assets or something, to where we're going over 50% debt-to-income ratio auto approval. And what that means is the underwriters are a whole lot more confident in signing off on things if they have a good, accurate, automated approval. So it's gonna kind of loosen things up a little bit. It's always been a weird scale with a debt to income ratio. If you have a surgeon that makes $40,000 a month, he's at a 50% debt to income ratio. He has $20,000 left over at the end of the month.
Yeah.
You have somebody that makes $5,000 a month. Their money left over is $2,500. Their expenses aren't going to be quite as much as that surgeon, probably all the way around. But it's a weird scale, and it always has been. But it's something that they use, and they're loosening it up a little bit for better or worse.
And you're still busy. You're still having clients coming from all over, and you're still writing loans, aren't you?
All over. I'm getting a few more from some local people now. A lot of my business historically has come from out of town and referrals from people that have moved into town. But I've gotten a bunch more 541 numbers in the last couple of weeks. Starting to get a lot of phone calls on foreclosures, believe it or not, and that just didn't seem to be that prevalent, but that's just a whole other market where the banks have been holding on to these properties for a long time.
Forever.
That could be because they were just tied up in the mortgage-backed securities and they didn't know who it belonged to. So that's probably some of them. Part of it is the home values weren't to that point. They've got a lot of money invested in taxes and insurance for years.
And our tax dollars bailed them out and kind of floated their boat during that time so they could just hold all these properties for market value.
Way too deep into that.
Yeah. And you can find those, they're still out there. Homepath.com has all the FHA foreclosures on them, and they come all the time. There's 2 or 3 a day sometimes that come out there. So don't count those out. They don't make up very much of the market anymore, but they're still out there. Now, you brought a friend along with you today, and Russell Brown's joined us from State Farm, who's a State Farm agent out on West Main Street. And Russell's been doing this 16 years, longer than, you and I have been doing this out of the state. So you brought Russell along because you think insurance is important that people know more about, right?
Well, I'm a little freaked out because he's been charging me for my insurance for 18 years. Is that all you've been in the business? No, he's actually my insurance agent. And, man, if I need something, I call him because he's seems like he's been in the business for 30 years. Honestly, I didn't know it had been that little of a time. Yeah. But I'll tell you what, he's really good and knowledgeable. So I just thought it would be a good value to the people to find out what he does. And
well, Russell, first of all, welcome to our show.
Thank you.
Nice to have you here. I think of it, it's one of those things that I never think when should I think of insurance? When you're doing a deal with somebody, you've got a buyer and a seller, and I think insurance is one of those things, Russell, that most agents maybe don't think about right off the bat, do we?
No,
but we should.
Yeah, and a lot of people don't think about it until they get right to the almost when it closes.
Yeah. I got to have insurance. Yeah. I've been there. I've actually been there on that thing. Yeah. All right. Yeah. So, why is it? How should we go about doing that? What are the kind of the steps there? What do we need to? How much insurance do we need when we get into this situation?
Well, typically, where people look at how much their loan is or how much they're buying the house, and they think that's their insurance. But in essence, we don't insure the land. So we're looking at not the market value, but how much would it cost if this house burnt to the ground and now we have to bring in a contractor to rebuild it and get rid of what's there? So it's a completely separate issue from what the market is, because the market goes up and down, but rebuilding a home is what it is and whatever it costs. So we have tools that we put in what type of house it is, how it's made, how many rooms, how many square feet, what kind of features, and it comes up with a figure. And then we review that with the homeowner, but it's ultimately their decision. Now they're there for our expertise, and that's what we provide. But then they also can say, I would like a little more, or I think that's too much. And then there's always a buffer in there of about 20%. So whatever your coverage is, you have an additional 20% with most companies on top of that.
Guy, do you when you're with your clients, you're getting loans out. Does the insurance? How do you handle the insurance part of that? Because it's there somewhere.
Yeah, well, it's there's two pieces to that, because a lot of times people are coming in with less than 20% down, so there's a little bit of misperception as far as the difference in mortgage insurance and homeowners insurance. So usually that's the first conversation I have with people if they have less than 20% down. I'm like, guess what? You get to pay this really nice insurance, and it's only to cover me in case you default. This doesn't help you at all.
Now, I would think, fellows, that most people are not putting 20% down on these loans. Is that correct?
It depends. Either you got 40% down or you got nothing down, and you're scraping for a couple percent.
I'm assuming
a lot of people get mortgage insurance.
The majority do not have 20% down, so they're having to carry then mortgage insurance and homeowners insurance, right?
Yes.
And it's two complete separate things.
Two different things.
Usually I have a talk with them up front. I can probably guesstimate within 10 or $15 of what an insurance would be for a house. So, we have that conversation up front before they've chose it, and a lot of times they'll go with their person that they have their insurance with on their car and, see if they can get some kind of a bundle. A lot of times they're from out of town and they ask me for a suggestion and I'll, give them a couple of suggestions of, some people that are good.
Now we talk about those two things. I'm sure people get confused about them. So what just tell people, bring up to date about what mortgage insurance is and why you have to have it at certain times.
The investors, meaning like Fannie Mae and Freddie Mac, have decided that you're a little bit less of a risk if you come in with a little skin in the game. So if you have 20% down, we could go way off into the weeds with lender paid mortgage insurances and different things like that. But just as a basic rule, if you have less than 20% down, they expect you to have mortgage insurance. It covers the bank for that portion in case you default on your loan, basically. If you just pay your loan down, automatically it will come off at 78% loan to value. You can get it, you can petition to get it done a little bit earlier if you've paid your thing down, or, if you get 80%, you can generally go in there and start talking to them. But automatically by law, they're supposed to take it off once you pay that thing down to under 78%.
Then you can get rid of that particular thing.
Yes.
So people carry both of those, Joe. That's a burden.
Yeah, it is.
To have to do both of those sometimes.
And a big factor with mortgage insurance is, if you get an FHA loan, your mortgage insurance is just going to be your mortgage insurance no matter what. But if
for the entire time you have the loan, we've learned that one. Yep.
Yeah. So I don't know if they'll ever change that at all. But once the government sees money, you usually don't get it back. But that said, credit score, it doesn't really matter what your credit score is. If you get an FHA loan, your mortgage insurance is that. But it really does become a factor if you're going to get private mortgage insurance, and that's what we generally do for conventional loans. And the difference in a credit score can be the difference in hundreds of dollars on a big loan amount.
Oh, absolutely.
So, that's one thing to really, get in there and get addressed soon.
Yeah. By the way, we're talking with Guy Giles from Bank 34 Mortgage Days, our resident expert here on the Real Estate Show and Mortgages, and Russell Brown from State Farm agent here in Medford. Okay, when I still am confused about what type of insurance I should get. I hear liability insurance. I need all sorts of different things in my house. I can get insurances for home warranties. All these kind of things. Is that true? Are they important? Do I need them?
Well, again, a lot of it is comfort level. There are people that buy warranties because it makes them sleep at night, where your traditional homeowner's policy covers the structure of the house and any outbuildings. It covers your belongings inside the house, and it covers your liability in case somebody gets hurt.
It does cover liability. Okay, all right. So someone walks on my property and has an accident or something, those types of things are covered on the regular homeowner policy.
Yes.
Okay, well, that's good to know. I didn't know all how much those actually were. Okay.
Yeah.
All right. What else does it cover?
Well, there's about under 20 items that our homeowner's policy covers, and most people aren't aware of that. So you've got your fire, theft, vandalism, water damage.
Right.
But where the difficult part of insurance is it doesn't cover maintenance. And people, usually it's mold or there's a slow leak somewhere, that there's dry rot. And that's when you typically have a problem where it's very expensive and then it's not covered under the homeowners. Whereas if it's just a small little repair, people are okay with that. But when it's thousands of dollars, they go, how come my homeowner's insurance doesn't cover this?
So do you get people do that? They come to you and say, look, I've had we know about mold in this show, don't we? We've talked about that and water damages and things. So, but if it's maintenance, so if you're not taking care of your property properly, these things not going to be covered by the insurance policy.
Correct. And insurance is a one-time occurrence. Boom, a pipe broke in the wintertime and water's everywhere, you're fine. But if I got in the shower today and I noticed there's a little brown mark above the tile and I pushed on it, it was soft, is that covered? We don't know until they get into it. And that's when you have to say, if it isn't, are you prepared to put all this back together?
Yeah. Now, should the contents of a house? I don't know if Joe and Guy, if these guys, do you guys have pictures of your home, the interior of your home, which shows your belongings at all? That in case there was a fire, you could or a water damage, you could show that. Do you guys do that?
I have 2 teenage kids, man. You'd feature that on my crack house if I took pictures on the inside of mine. But no,
we don't have to put them online. You just hold them, right?
It's funny you say that because there are some things around my house that are probably
I mean,
Probably should have a picture taken
Russell,
of.
is that important that people should do that?
You know, from our point of view, I think it is only from the standpoint we won't require you to prove what you had, but for your own knowledge to remember what you had is to video your home and then email that to somebody or store it somewhere off-site. Yeah. Don't stick it in the house somewhere where it'll burn up in the fire. Yeah. But that way, when it's claim time, you can look at that and go, oh, I forgot about all that in that room because I would have never remembered it. So it's really for the customer to remember what they had.
Especially after a traumatic experience like a fire and all that you go through to restore yourself.
We're up against a break coming up here, but I'm curious as to what's the biggest claim that the most often claim that you have in the insurance world there in homeowner insurance? What's the biggest claim?
Water and fire.
Water and fire. That's exactly. Remember when Belfour was here, they talked about water damage being the number one problem in that they deal with. Anyway, it's interesting. We're with Russell Brown and Guy Giles here on the Real Estate Show. We're going to come right back, continue our discussion about insurance policies, mortgage rates, and more. We're coming right back to KMED right after this. The Real Estate Show rolls on KMED. July 22nd is our date. Pete Belcastro and Joe Brett, the real estate guys in the house. Don't forget, you can check out any of our past shows at realestateshoworegon.com. They're all there for you. Some terrific shows. Good listening for our many loyal viewers here in KMED land, Jackson and Josephine County here in mid-July.
I don't know how much they have to actually view when we do our radio show.
Well, they can look at a picture. We have a picture.
Online. They can view the show online.
I'm bound and determined before I leave KMED, we're going to be on video in this place. You know that I'm just bound that's going to happen one of these days.
You got about 10 years left.
Hey, next week here on the show, there are thousands of septic tanks, all septic systems all over to the two counties. And
some we found are in better shape than others.
I'm telling you, they can break a deal faster than anything I can think of as septic systems. It's like insurance that we're talking about today. If you don't take care of it, and if you don't follow up on it, you're going to pay for it in the end. Yep. And so Kevin Riddle from Sweetwater Sanitation will be along here, and we're going to talk about septics and what you need to know about them. I'm amazed. I go onto some properties and you say to somebody, well, where's the septic tank? They don't even know where it is. Yeah. Well, it's bad.
They said I had one.
That's bad. Yeah. But it's working. Those kind of things. Anyway, today on the show, Guy Giles from Bank 34 Mortgage is with us. He's our resident mortgage expert, along with Russell Brown, who's a State Farm insurance agent. They've joined us here to talk about, things that they know best, right? Insurance and about mortgage rates. Okay, Guy, true?
Yes, I know a lot about insurance.
Yeah.
Because you know Russell.
Because
he's your agent.
I have a good agent. Absolutely. And I'm getting my septic tank pumped on Wednesday, by the way. But no, there's a lot going on.
Well, tell me,
man, you lost me.
How you the different types of mortgage insurances that you can get.
Well, basically, we just have one, which is your homeowner's insurance that covers your home and the belongings and the liability.
Okay.
And medical.
Can I add other things to it too? What could I add if I wanted more?
Yes, and every company probably has a little bit different, but we have an identity theft feature that you can add to your homeowners, which gives you some protection in case your identity's stolen. There's backup of sewer or drains. There's extra coverage for jewelry, firearms, computers.
Oh, really? I didn't know that. Okay.
Because some of those have special limits, so everybody gets a certain amount of jewelry, and if you have more than that, then you'll have to decide whether or not you want to increase that.
So if I had $30,000 worth of high school athletic webcast gear in my office, I probably should consider that's probably above the limits of my normal coverage.
Well, depending, it could be, yes.
Yeah. Well, the equipment would be and those kinds of things outside of the coverage.
Right.
That's why you have to have separate coverage for that on its own thing there. Do people generally add on things, Russell, or do most people just take kind of the bare minimum in homeowner policies?
Well, depending on the agent, if they're bringing up all of those issues, people will sometimes add more. I think majority of the people take, here's the package homeowners policy as it's presented, and they take that. There's a few others that will come in and say, I have $30,000 worth of firearms. Am I covered? And then we talk about, do you want it covered, or do you just know you only have this much, and are you good with that? And then they'll make that decision.
That's probably a smart way to do that. The cost of these things.
Hold on. First, is there a way to know, to get the coverage and have your wife not know how many firearms you actually have? Just hypothetically.
Yeah, hypothetically.
I don't think my wife would know how many firearms you have.
Well, you never know about those things. You said that one of the biggest problems that people when you have a policy that you think that covers you, but it's not covered. You say mold is the big issue here. Is that surprise you? Is that what it is? I mean,
that's the one that we see every so often, where there's just a slow leak in the roof. It's not really done any damage that you can visually see, and most people don't crawl up in their attic other than maybe Christmas time, and so. We'll get we opened it up and looked up in there, and there's black spots all over the inside of our attic. What do we do? And that's when it can create a potential.
And there's no mold insurance.
There's some companies provide a little bit, maybe $5,000 in coverage, but typically there isn't.
Yeah, no, you're on your own.
Yeah.
And mold remediation can be expensive.
And that's the thing. Go ahead.
Oh, no, just going to say the other question that I get a lot is, what can we do to get some kind of insurance in case I pass away and my husband is stuck with this? You know, we're qualifying on both of our incomes, and it might be kind of a stretch if something was to happen to one of us. So what kind of things do you guys have for that?
Yeah, there's several different kinds of protection where you would some call it mortgage insurance, that just says we're covering your mortgage while you're in this home, and then it goes away once you've paid off the loan. Other types are, I want to have something that we'll ask the couple, if something happened to, let's say, the husband, would it be important for your family to stay in the house in the event that he passed away? And then they can decide, we want to keep our standard of living, and then we can come up with, well, what would that look like financially? What would be the amount? You want to just cover the mortgage? You want to look at college education or continuing on with the income that you were receiving? So people can make those types of decisions for what's best for their family.
Well, what really caught my ear, Russell, was just the homeowners, and not by any conscious effort, just negligence that can lead to mold or those leaks and damage issues, the soft tile and things like that. It really points to the vigilance a homeowner has to have. I had a cable guy come out, and he got under my house in my crawl space. We noticed some dampness down there that I'd never seen under my house. Literally 3 weeks later, I hear water running under my house. I turn off all my toilets and faucets and everything, and there's a pinhole size hole in one of my pipes. I had to get a plumber down under there but it was for a couple of days till the plumber could get there. It was even draining out into the street because so much water was coming out. But just that little clue, and then when I heard that water running, was able to put two and two together, and I wonder if that would have gone unmitigated for a month or two. There could have been some real problems, and that moisture is often a cause of mold and one of the instigators of a mold problem as well. So.
Did you make an insurance claim?
No, I didn't have to, because we got to it and got the pipe fixed, and I made sure all the vents were clear, and it's aired itself out and dried out pretty well under there. But diligence is really a part of it. Can really being in front of that, because there's no remedy other than out of your pocket when it's just your own lack of foresight to take care of that.
Yes. Yeah, that's correct.
Maintenance and upkeep people don't do those enough, and like I said, you're going to always pay for it at the end.
Yep.
You're not going to get away with that.
Yep.
I would think that. Tell me about swimming pools. We've got lots of pools around. I hear all sorts of different. Because I asked homeowners or something about pools, and some people have fences, some people don't. Some people say you got to do this, you got to do that. What should people do? What's the right thing to do if you have a pool regarding insurance?
Well, the thing I would focus on as a pool owner is, can one of my neighbors, can a small child wander over here and fall in? And that's when you have a tragic situation. So we require people to have their pools fenced, just because, high school kids, if you're on vacation and somebody hops your fence and swims and somebody gets hurt, well, you can deal with that a little differently than some small child just wandered back there and fell in. And that's what you never want to have happen. So we require fencing.
You do require fencing. What about the cost of that pool insurance? Does that add a lot to it, or how does that affect my policy?
Depending on how much you want to cover. An in-ground pool, I always look at it and think, well, it's a hole in the ground that's in with the concrete or whatever kind of fiberglass you have. There's not a whole lot of damage that can happen to it. Sometimes it's maintenance where it's leaking, and again, you're dealing with, if it's just a leak, that's just maintenance. But something would have to fall, a tree, and crack the pool, then you'd be okay there. But you decide, how much do I want to cover this pool for? If it was $40,000 to put it in, you may not need $40,000 in coverage, but you might say, if something could potentially wrecked this whole thing.
Right. Do I need more liability insurance with the pool, do you think, or not? Does my homeowner policy cover that?
Yeah, there's different levels of liability. So I look at things like pools, dogs, trampolines as potential claims because you have your friends over, neighbors over, somebody gets hurt. And if you found out that, I have $100,000 in liability coverage for somebody getting hurt that potentially would be my fault, and if for $50 or so a year I could have $1 million, well, maybe I would look at it differently on my insurance and say, well, I have a pool, I have a trampoline, and a couple of dogs. Maybe I should.
Oh,
And
interesting.
trampolines have really come on. They used to be harder to get to, but they were always injury prone when I was growing up. And now they're out in everybody's yards. I bet you get a lot of claims.
Yeah.
I see a lot of those.
Yeah.
You're right. I see a lot of trampolines around in different yards.
In various stages of
Interesting.
safety caging and all of that.
We've got one more segment to go today. We're with Russell Brown from State Farm Insurance and Guy Giles from Bank 34 Mortgage. The real estate show here on KMED July 22nd continues right after this. Real Estate Show continues here on KMED. July 22nd is our date. Glad you've joined us here on KMED. Hope your summer is going along okay. Certainly the weather is it's like summertime, boy, in the
I get to go
mid
play
90s.
cornhole right now, so we'll see how the weather is.
Well, people do lots of stuff in the summer around here. What's so nice about this year is we have water. The rivers, the Rogue River, the streams, the lakes. People are really enjoying it after years of drought. I think it's been fun. A lot of people around.
I actually just closed one today with a guy. Actually, it was asking me about swimming pools and local ones here in town, and I'm thinking, man, with all these lakes and all this water, and I just kind of encouraged him to take his kids. He's from Nevada, so he was kind of new here, and I'm like, that's the biggest attraction. We got a lot of fun places.
And where do you send them? Okay, tell me where you send them.
I would probably
Your favorite?
I mean, if they're little kids, I'm going to keep them away from the Rogue River, but probably my favorite for just kids to go swim is like Applegate Lake.
Applegate,
I mean,
Immigrant
it's-
Lake.
Yeah,
Yeah,
well,
all
Immigrant's
those
all right. It
good.
gets a little
Yeah.
muddy a little later in the year. But
Anyway, that's fun to do. We're with
Lake
Guy
of the
Giles
Woods.
from Bank 34 Mortgage today and Russell Brown from State Farm Agent here in Medford. And welcome to our show, guys. We've been talking about insurances and the types of different insurances that you need from homeowners as well as the mortgage interest rates. And one of the things that I've become is an investor. We got lots of people, Russell, are investors. Whether they own rentals, whether they own vacation rentals, Airbnbs, apartment complexes, whatever, duplexes. Does the insurance work the same way for an investment property? Or tell me what the difference is or what the parallels are there.
Okay, the main difference for an investment property is that you're providing insurance for the structure itself, but not for your personal property. It'll give you very limited coverage for your property, which is usually maybe a stove, a fridge, a lawnmower if you left that there. So you don't really have a whole lot of coverage typically on an investment property. It's just liability. As a landlord.
Okay. Liability for the landlord, and covering the structure, the replacement of the structure, correct?
Yes.
And that's it.
Yeah.
Is it cheaper or more expensive to have that type of policy as an investment or as an individual? I'm just curious as to just the differences.
It's typically less insurance cost on a rental as opposed to a homeowner's because you're not covering all the belongings.
Okay, but if you are a renter, you do renters policies
Yes.
too. So renters should do what then?
Renters is liability as well.
Okay.
So if I'm a renter and I leave my stove on and I leave and I come back and there's a fire, then my liability comes in and pays the landlord's back to fix it.
Mm-hmm.
But then it covers only my personal property. So my couch, my furniture, my electronics, that's what my renter's policy covers, but not the structure.
And what are renters' policies? Are they expensive, or tell me what those are like?
They're usually $10 to $20 a month, depending on how
They're
many.
not very much.
No, they're not at all.
But renters really should. Hate to use the word should, but renters need to have insurance policy, don't they?
Yes. And even when people tell me I don't have anything I'm concerned with, I always tell them, but if you're in a complex, let's say a fourplex, and you leave that stove on or you leave the tub on and water spills out everywhere, you're going to have to pay that landlord's insurance company back if you're found at fault.
It's funny because you're required to have homeowners insurance when you buy a property, right?
yes, absolutely.
But renters are not required to have a policy for themselves, correct?
I mean,
renters are.
Some apartment complexes will require it, but not usually.
Not usually. That's a good idea to have it. I mean, I was a renter for a long time, and I always was one of the things that we always had was renter's insurance. And as a landlord, also, I own a commercial building, and I've got, like you say, liability insurances and replacement, those kinds of things. So yeah, it's really important because you never do know really when you do need it. And of course, when people I know cost a lot of money over years, you think I'm never going to get it back. Big deal. So you never had to use it.
Right.
I'm okay with that too. I think.
Well, and another thing that I did just a few years ago, I had my homeowner's insurance with a different company, and they raised my rates up. I never had a claim or anything. So that's when I shopped around a little bit and found Russell. We'd known each other because our kids went to school together. But I don't think it's a bad idea every now and then. Maybe just give him a call and see if he can give you a quote or something, because things change. I mean, we're in an appreciating market right now. And I don't think that things necessarily, they factor that in on the insurance side. So it's probably not a bad idea to go in, and maybe you have collected a few firearms, or maybe you have done something that's changed to maybe once a year go in and just do a nice one, and then maybe shop your company against him a little bit.
Well, what happens with that, Russell? We've had a lot of appreciation. If I started a policy with you, say 20 years ago, okay, today I'm probably on the same policy. I may not have even changed it. Does that matter? Even though my house was appreciated or something like that, can I still replace it if I had a policy from 20 years ago? Can I still replace it if I need to?
Well, most policies have a cost of inflation protector built in, but it's always good every year or two to review that and make sure you're comfortable with it.
I suppose that would be a, smart thing to do. I don't think we check. I think insurance sometimes is so much an afterthought to us, and we think of the other things first, and that seems to always be the last thing done, the last thing I need to get, the last way I can close it is that I don't think of it all. I just don't think of insurance all the time.
And until you need it, then you're just praying that you're up to date on everything.
All right, well, so good. So back to Guy here before we run out of time. So here we are mid-July, interest rates in the low fours, high threes, depending on, credit scores.
High threes on the government stuff.
Yeah.
So we're, it's still just really, really good.
And people buy, what do they, I was asking these questions because I'm always curious as to what you are seeing in the market. Are they buying, were they buying certain things, certain areas, or certain prices?
Well, for me, I went ahead, I think I'm closing 13 this month, and I for the first time ever, it's weird that you asked me this, I added up my medium loan value, and it was almost $300,000. Now, that's not the purchase price, because obviously people have down payments and things, but that seems higher than the county's. It's higher than the county's median average. Yeah, so it was kind of shocking to see that. So it's still a little bit of everything. There's not a ton of really lower end things. I think that's why it's really good to have a good agent for your real estate agent also, and just have them come in, because they're going to know what to offer. They know if there's been price reductions on a house, they know how long it's been on there. If they have access to notes, maybe why it fell out of escrow before. You really want to go in with a good, strong offer and listen to your real estate agent, because they do this every day. And I hate to see people miss out on a house for $1,000 or $5,000, and then it appreciated through that within 3 months.
Well, we're still in that $350,000 range and below is still that multiple offer kind of thing where there's simply no inventory and what's on there, unless it's really bad or it's really overpriced. It's going to go pretty darn fast. Once you get into the higher ranges, of course, you have more there. So you're still seeing price ranges all across the board?
Yeah, I think my highest one right now is about 580. My lowest one's maybe 2. I don't even know.
Whatever they are. Russell, how can someone get a hold of you at State Farm with more questions about insurance?
Well, I'm on, obviously, on the internet. Just look up Russell Brown. I'm on Main Street, right next to Budget Lumber and Bi-Mart, Roadhouse Grill.
Out there in West Main. Nice to have you here today, boys, and we'll talk to you soon. All right, we got to go. We're out of time. That'll do it for the Real Estate Show here today. Pete and Joe, thanks for joining us. Have a great week, everybody. God bless you all. We'll talk to you next Saturday right back here on KMED.
You've been listening to the Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshowOregon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.